open, our MarketStream.live. My name is Joseph Cusick from the Cusick Group Securities offered by MoneyBlock. Let's take a look at the action, and it's mixed. As a matter of fact, you're seeing all the major indices just ever so slightly in the red. After what was an absolutely impressive move to the upside yesterday, you see that the NASDAQ Composite is down 18 at 58.8591. The Dow Jones Industrial just barely in the red, down 17 points at 21,098.08. The S&P 500, the SPX at 2388, down 734, probably the weakest of the bunch. And you see that volatility is still continues to come off. The VIX trading at 1192, down 62 cents. We are seeing that the Russell 2000 is holding up very well, in spite of the fact that we've seen the larger cap brethren pull back a little bit more. The IWM, which is 1/10 of the actual Russell 2000, that's the ETF that tracks it, is down 43 cents at 139.93. These are those domestically centric and sensitive stocks here in the United States. So a lot of the Trump administration proposals and policies are going to impact these small cap stocks. Bonds came off hard again today. Yesterday, absolutely destroyed. We're going to see if they firm up, especially now that we have an FOMC meeting that is going to be in a couple of weeks, starting on the 14th. And we have crude down 15 cents. That's after a notable headline overnight where we see that production out of Russia hasn't changed. Could we actually be seeing that not all OPEC and non-OPEC nations are adhering to the production cuts? Well, we're starting to see that impact. The dollar continues its strength. We've seen that universally currencies across the globe have been under pressure against the U.S. dollar, most notable the yen, the euro, pound sterling, and the yuan. You have materials down 27 cents, XLB at 53.01, but you have retail. Taking a look at XRT, trading at 43.25, up 36 cents, and that's what I want to focus on this morning, is the retail sector actually doing quite well in spite of the fact that we have a little bit of a rest right now in the market. Let's take a look at the retail ETF first, and then we'll look at some of the names that have had notable moves today, both due to catalyst earnings, as well as just basically the overall climate. Now, taking a look at XRT, which is the ETF that tracks the retail industry, I'm going to actually come over here and zoom in a little bit on the most recent action. You like to buy on weakness. The overall market in general has been screaming to the upside across the board, both large caps and small caps, mid caps. But we've seen retail has been under pressure. As a matter of fact, you have it below its 20, 50, and 200-day moving average. The bulls have been in control for the last 6 months in retail. We've had a slight consolidation right now in that 43 to 44.5 range. You're going to want to see that the bulls take control here at this 43.38 level. As a matter of fact, if I scroll up a little bit more, you're going to see that specifically we're going to want to see if you're going to start getting bullish on retail, you want to get above that 20-day moving average of 43.44. That means the short-term bulls are starting to gain control. With the underlying XRT trading at right around 43.35, it's got a little work to do. Taking a look at the 50-day, 43.90 up here. That's where a break above there means that institutions are starting to buy into some of these retail names. Now, what are some of the specific retail names that we want to keep an eye on that can give us a little bit of a pulse on whether or not that activity could move to the upside? Let's take a look at an earnings mover, Abercrombie & Fitch. Came out, had spectacular earnings this morning, and the stock, as you can see, really popped. As a matter of fact, it popped after basically hugging on its 20-day moving average for the last 3 sessions, dropped yesterday in spite of the fact that in front of earnings, and you see after earnings, stock popped. It settled down here right around 11 and some change, 11.90-ish. was the closing action, and you can see it just blew through its 50 and 200-day moving average. This is a bullish signal. It's been really beat up, and I'm telling you, this is a teen move. What do I mean by teen move? We are now getting into the spring season. This is where wardrobes change. And for those of you that have kids, you know exactly what I'm talking about. Specifically teenagers, they go out, they update their wardrobe. There could be a real opportunity in this stock, especially if we start to see that the weather continues to be nice. We could see some more foot traffic. Also, we're going to see how Abercrombie is now working on the online. In other words, the consumer has shifted their habits from not walking to the store, but clicking on their phones, on their tablets. So we're going to see how their strategy is going to play out, especially now that we're going into the spring season, where this is going to be a real hot time of year, potentially in the sales cycle for Abercrombie. Good earnings, stocks popping today. Let's see if that continues going into the spring season. Also, Abercrombie did cut about 60 stores, so they're trimming a lot of the fat that normally would be overhead in Abercrombie and for bricks and mortar. Another one that has basically blown up to the upside is Monster Beverages. Let's get a little Monster. Basically beat on the revenue line, stocks up 15%. You can see here it's trading up right around $47.79. It basically blew up from $41.50, blew through its 20, its 50, and now it's challenging its 200-day moving average. Now this 200-day moving average, if I scroll up, is resistance. So if we look here, 48.16 is now long-term resistance. We start getting some action up in this area, and then it starts to really get some strength with some volume up above that 48.50 level. You're going to start to see that Monster is in good favor with both the short, mid, and long-term bulls, because there's a whole lot of people that are in Monster at higher prices than where it's been trading over the last 6 months. Some other names that have also been notable as far as movers, especially going into earnings, is Budweiser, and that's AmBev, ABV. Let's take a look at that, and I apologize for whatever reason. Let's take a look at Bud. Anheuser-Busch. This is something that I've been keeping my eye on, the beer stocks. They've been performing quietly pretty well. But then I started to hear some grumblings out of Sam Adams. Sam Adams, there was some concerns about their competition, especially in the specialty beer or the craft beer segment. Bud came out. As a matter of fact, there's trouble for InBev, in Brazil. And you can see that that's weighing on the stock. And the bottom line is that you saw today a breakdown from basically right around that 109, 110 level, break down today to that 106.77 level. That's a break of the 20-day moving average. It is holding above this 106 level, which is the 50-day moving average. These are critical levels that, and also a potential opportunity. For those of you that have been looking to get into this space, the stock's trading right now at 106.76. The 50-day moving average comes into play at 105.95. So we'll say 106. The 20-day moving average is at 107.42. So the short-term bulls now are being tested. Anyone that has been getting in the last month or 2 months, basically since the end of last year and the beginning of this year, they're being tested. This is an area also, if you were looking to add exposure to this space, this could be an interesting area where we want to see for a day or two how the stock reacts. Does it rebound? And if it does, we're going to look to potentially put a position on this if we wanted exposure into this space, especially if we believe that this is an opportunity in the brewing area. Last one that I want to take a look at is going to be ticker symbol BKS. Missed on earnings, Barnes & Noble. And I was just in a Barnes & Noble trying to get a book for my kid. And you can see that they missed on earnings. Barnes & Noble is a bricks and mortar. We've seen that the bricks and mortar have been having issues. Now, Abercrombie & Fitch, they popped to the upside so much because they announced that they are closing stores. They're reevaluating their model, and they're going to get out in front of this. They're managing their inventories, and they're walking into the spring season to be competitive. Barnes & Noble missed. Sales continued to fall. Earnings reflected that. The stock is trading at $9.10. And as a matter of fact, we saw a couple weeks ago that not only did it break its 50-day moving average going into the end of last year, but it also broke through its 20-day moving average with some conviction before earnings, about 7 days before earnings. And now you have a lot of headwinds for Barnes & Noble. And right now, both the short-term, long-term, and mid-term bulls are in trouble in BKS. We're going to watch this one. Watch for the volatility component to build up. And again, we're going to watch to see if the traditional bricks and mortar are going to come under more pressure because of sales, drop in sales and foot traffic, as well as pricing pressure. We'll have to keep an eye on that. All right, folks, that's it right now for what's hot or not here in the U.S. markets. Join me at 1:30 Eastern Time. I'm going to be doing strategy now. I'm going to have a really cool strategy for you guys. We're going to start talking credit spreads, especially if we start to get a little more volatility in these markets. That could be a great opportunity to get some yield into your portfolio with having fixed risk. Today, we're going to talk about doing some bull put spreads. That's a credit spread by selling puts. And with these pullbacks, that might be an opportunity, especially if the market firms up, bounces up. We get a nice yield on our risk capital. Join me at 1:30 Eastern Time here at MarketStream.live for Strategy Now. See you then.